This is your Senior Moment, brought to you by Senior Guide USA, with your host, Lee St. John.
Hi, this is Lee St. John, and today I have a wonderful guest, Patricia McDonald. Now, Patricia is an elder law attorney, so I don't know if that's a new phrase for you, but basically an attorney who really focuses on providing legal services, advice and assistance for the elder community. And the topic that we're going to discuss today is reverse mortgages. So, Patricia, welcome.
Thank you very much.
So what we're going to talk about today basically is a reverse mortgage right for me? So we'll have a look at a number of different scenarios so that the listeners can get a lot more information and really start to make an informed decision in the area. But Patricia, before we get into that, how did you end up in this arena, and even end up being a lawyer in the first place?
Well, I started as a paralegal in 1990, and I discovered that I really liked the law, and I saw an empty nest coming. My two children were growing and going to college and moving on to be independent, and I decided that I was doing most of the work myself anyhow. I could be a lawyer as well.
I love that. And particularly for people as well who are, who've gone through one phase of their life and going, what now? I mean, you've done something that most people think they can only do when they're just leaving high school and just go straight into studying law. A lot of people don't even consider doing that in their past having children years.
That's right. It was a challenge, one that I thoroughly enjoyed, and I don't have any regrets. I love going to work every day, and I love working with my clients and helping them get the best results for their needs.
Oh, that's so wonderful. So start us off. What is a reverse mortgage? I mean, we see the ads on the television. They say, yes, this is all fabulous. What is it?
A reverse mortgage is just like a forward mortgage, is in that you borrow money from the bank against the value of your home. The difference in a reverse mortgage is that you don't pay the interest back and you don't pay the principal back until after you've sold the home. So it continues to grow larger because you're not paying anything back. So in the end, you could owe the entire value of the home, but you never give up your deed, and you are never displaced from your home. You don't have to pay a monthly mortgage amount, and it is very handy for those people who have no income and who need some medical assistance or medications or, a roof over their head.
Okay, so let's go through, let's start off on the negative side and we'll finish on all of the good positives. So what are the negatives? What are the cons for having a reverse mortgage?
A reverse mortgage has higher closing costs, and a reverse mortgage can eat up all the equity in your home. So let me explain what those are. The high interest rate, the high closing costs, are attributed to an insurance policy that's required to be paid along with the other normal closing costs to HUD. That's the Housing and Urban Development. Because what they do is they ensure that should the loan or the lender go out of business, go under, that the loan won't be called. And so the insurance policy kicks in, and the homeowner still continues to be able to either draw on the reverse mortgage or stay in their home and not have to pay it back.
Okay, which is a positive, but you're saying that there are substantial fees.
But that's because of that, it does increase the closing costs, and people are afraid of the closing costs because typical forward to mortgage closing costs can be about $6,000, and for a reverse mortgage, it can double that.
And so do people need to have that, let's say it's $12,000. Do people need to have that in cash, or is that part of
No,
what's the
that's
transaction?
part of the loan.
Okay.
So you always start off with a minimum loan because the closing costs are built into the loan.
Okay,
the
so
initial loan.
what are some other negatives? What are some other reasons?
The other
people
negative
shouldn't?
is that it eats up the equity in the home. So say I wanted to leave my home to my children, and I've taken out a $200,000 loan, and I stay in my house for 20 years, that loan's going to keep growing, how much I have to pay back, because I'm not making any payments, okay, and I'm not paying any interest. So that keeps compounding and getting bigger. And so if my home, when I die in 20 years, it was worth $400,000. I mean, if my house is worth $400,000 and the loan has grown to owe $400,000 or more, then there's nothing that my kids will inherit unless they can pay off that mortgage themselves.
All right, so so let's say the house is worth 400, just to take your example, and let's say when the person passes, the reverse mortgage is now 500,000 due. Who pays that other 100,000?
Well, that's where the insurance policy kicks in. It makes the lender whole, okay, and the borrower will never owe any more than the fair market value of the home.
Okay.
That's what's called a no-recourse loan. The bank can never go after the homeowner, the borrower, for any more than what the fair market value of the loan of the home is.
Okay. Are there any other negatives?
Not that I can see.
Okay. Well, it's sounding pretty good so far for a lot of people. So list us off some of the positives.
Well, the positives are that you still can keep your title on your home. You can use it as a credit line. You don't have to take the full value, of the loan in one lump sum. You can just use it as a monthly income. It's a debt, not true income. It's not earned income, so that if you need to qualify for Medicaid, it's not counted against you.
So that would mean it's tax-free as well, then?
Correct. It's not income. It's a debt. Okay. So there are a lot of good things about it. You don't have to go into a nursing home if you can get enough money out of the the loan to keep you in the house and help pay for maybe a personal care attendant or pick up the difference what Medicaid will pay for. And some people just want to get rid of that mortgage payment because that one mortgage payment is what's preventing them from buying enough medicine, maybe from their Social Security check. So if you can get a reverse mortgage and pay off your regular forward mortgage, then you don't have to worry about that monthly mortgage payment anymore, and then you can live off maybe the Social Security check. There was a story about a young elderly woman who stopped going to church. She loved going to church. But she didn't go to church anymore because her friends that she would go with would always stop after church for lunch.
Yes.
And she was embarrassed because she couldn't afford lunch. Once she got the reverse mortgage, she didn't have that mortgage, forward mortgage payment anymore, and she went back to church because now she had enough money in her pocket that she could go out with her friends after church for a cup of coffee and a sandwich.
I love it.
And enriched her life.
Yes. So it sounds like the only real negative, I mean, there will always be positives and negatives for everything, but the only real negative is that your children may not inherit what they think they're going to.
Right, and they still could if they had good credit and they were able to get a loan large enough to pay off
True.
The house.
True.
Or,
yeah.
So if the only other negative I could see is if some unscrupulous people would try to get them to use that money and invest it into improper financial vehicles that would end up using up their money. Or if somebody was a spendthrift and took a full drawer and then spent it all on, cruises and vacations and all the rest of it. And then a couple of years later, they didn't have any money to live on, and they still had, they have no other way of getting any income.
Yes. And so that brings up the question then with the reverse mortgage. So let's say, for argument's sake, that the couple do a reverse mortgage and they're able to access $200,000. Do they get that as a lump sum? Is that paid to them?
They can get it as a lump sum. They have a choice. They'll have a choice of getting it as a lump sum, or they can get it in monthly installments over, a course of their lifetime, or they can use it as a credit line and just draw on it when they need it.
Interesting. So if there's enough equity in the home, they could even take that, put that into some sort of an interest-bearing situation that is then giving them additional.
That's correct. That's correct. But then you have to worry about other things like, is that interest going to put them over income for qualifying for Medicaid? So that and that interest will be taxable.
Yes.
So that you still have to be careful. You still need to have somebody who is reputable to handle and give advice to the elderly. There are a lot of people out there who are unscrupulous and who don't advise the elderly properly. And unfortunately, the elderly are very trusting, and they don't know who to trust. And that's where the reverse mortgage gets a bad rap.
And so, Patricia, how do people find you? Where are you located? Give us your details.
My name is Patricia Bloom McDonald. It's a hyphenated name, and you can find me on the Internet. You can find me, on the board of our overseers website, and you can find me in the phone book, and I have ads in the South Shore Senior News and the Canton Citizen, and you can call me on the phone, and I'm in Canton, and my number is 781-713-4709.
And the website is www.mcbloomlaw.com. That's McBloomlaw.com.
That's right. Yep.
Patricia, thank you so much. If you could leave the listeners with one tip, one suggestion, one pearl of wisdom, what would it be?
Always seek the advice of a good attorney before you enter any kind of financial transaction.
Wonderful. I love it. Well, Patricia, thank you so much for being with us today.
Well, thank you for having me. I enjoyed speaking with you.
This is Lee St. John with your Senior Moment, brought to you by Senior Guide USA. Have a wonderful day.
Thank you. You too. Bye.